Good evening. It is Peter Resnicek from Weekly Options Advisory. Good to be with you. And I'm talking about Apple, which is kind of a no-brainer here. Like, right, this one seems pretty obvious to me. Obviously, anything can happen, but look at this chart. This is 1, this is 2, this is 3, and now it's 4, and it's all the exact same spot. So obviously, the play is to the upside. And how far it can go is usually a function of these consolidation levels. So you could make the argument that it could actually go from, like, you know, say 40 points or 45 points. This is like 197 to 237. So let's say this is 40 points. But let's just be conservative and say that, you know, this move here is roughly 220 to 237. This is 17 points, which would put you up to 254. Right, so let's just think in those terms of how far it can go, right? I like to be a little bit more conservative. I think if I could run the stock from 240 to 250, I'll be happy about that. All right, so how do you play it? There's a number of different ways that you can get involved with this. The first, most simplest way is just simply to buy shares. And a lot of people kind of balk at that, but if you have a big enough account, I think it makes sense to just buy shares because they do trade longer than the options do. You have that morning time until 8 a.m. Or from 8 a.m. onwards, rather, and you have the evening time. And then you can always sell options against it, right? So it's pretty cool. But let's say you wanted to effectuate this with options. I think that you have to go out not too long. You want to go out like maybe a couple of weeks. I'm thinking about using like a December 20th here, which gives you enough time. And when you structure like a vertical or a butterfly here, what you want to be cognizant of is how much credit you're getting for what you're selling. So, you know, you don't want to do like a 240, 260 or something because you're obviously not getting any credit for the 260. If you look in here, there's nothing there. So you have to be cognizant of basically what am I paying and what am I getting, right? So in this case, you're buying these 240s here, which I think is a good strike to start at, and notice that you're getting about 50 cents for the 250. So you're knocking this down by about 50 cents, whatever. You're coming out with a net cost here of 241. Now you'll notice that this is going out to December 20th. This is the way that I'm going to do this in the weekly options trading room. I am probably going to buy this vertical. I'm going to give it till about D's 20. And you can go longer out too, right? But except the only thing is, remember, as you go longer out, you have to be careful is how much are you selling the top strike for? You don't want to say, well, I'll give it all the way till the end of the year. And like I said, I'll go 240 to 260, but there's no real credit to sell at 260, so it doesn't make any sense. But let's just say that you did this spread here, 240, 250 on the D's 20. As you know, my MO is always to do what I call risk reversal, and that means always to be a seller, always be selling. It's like, you know, in sales, they say ABC, always be closing. Well, I think it's always be selling in the options market, and that doesn't mean you have to be selling naked. In this case, it's naked, but you can be a net seller, right, which means having longs in front of shorts, but you have more shorts than longs. That's the perfect example or explanation of what we do in a ratio spread, right? Like, let's say you're going on the call side, you do +1, -3, and you're going up in this direction. That is what it means to be net short, because obviously you have a lot more shorts than you have longs, and you're just using these shorts where you think the market is not going to go through, right? There's kind of a shelf there. You are using them, why? To finance these longs so that you get them cheaper, which increases your ROI, right? And also gives you some cushion if the stock just does nothing, right? Because as we know, going sideways on the call side is the death of long debit premium, right? It's just going to all eke away and you're not going to make any money and you're actually going to end up losing money. So to counteract that, if we're talking about a debit structure on the call side, I like to be a put seller. So you'll notice that I put these two up here for D6 of 227.50 and 230. And the most important thing is here is you want to have expiries that are short when you're selling on the put side and an expiry much longer on the one that you are buying on the call side in this case. So why would I be willing to sell 227.50 or 230? Well, on the chart here, 230 is the 21 EMA right here. And this here is the anchored VWAP. If you watch my video just from a couple days ago over the weekend, I did talk about anchored VWAP a bit, and I said I'm going to be bringing more anchored VWAP stuff in. And this is a great place to anchor to because it was an earnings report, right? They reported earnings here after the close and the stock gapped down. So what is the volume weighted average price of Apple from the moment of the gap down from when it started this rally? Well, it is exactly 227.40. And notice how well, once that volume weighted average price started to get established, it's actually been holding pretty well. You've got some shadows below, but look at over here. All the lows are perfect. You have 5 sessions where it was literally perfect, like boom, right on the AVWAP. So even though the price is high here, which means that the location for selling puts is actually poor, I will admit that, this is the place you want to be. You kind of want to be here. Either here is a little more aggressive or right at or below the anchored VWAP, which gives you the confidence that if the stock comes down, it should probably stop there and not violate your puts. So how would you want to structure? Obviously 22 cents and 30 or 35 cents. Let's say you did the 35, you're a little bit more aggressive. Actually, let's just go with the 22s, right? The 22 cents less aggressive on the 227.50s. You basically do that in a ratio, meaning that for every one of these that you buy, let's say you sell 6 to 8 of these. And then you do the math and say, okay, if I sell 8 of these, right, that's pretty good. That's $1.76, right? If I sold 8 of these, it's $1.76. Well, what percentage is $1.76 of 241? If Apple can break out and not test these puts at all, in 1 week I've knocked this down, right, to a cost of roughly 60 or 70 cents as opposed to 241. So now I've got a debit of 70 cents instead of 241, and I can do it again before December 20th happens again. I can do it again on December 13th, right, which is 7 days after this. I can just rinse repeat it for the next Friday, and I can even rinse repeat it again as the stock is moving up for December 20th if I like. So that's essentially how I will be playing Apple in the near term, using options that way. As I was saying in the beginning of the video, you can even buy some shares in that sense, and then you can always, sell against it. You can sell calls against it or whatever. And don't ever discount the fact also, I'll leave you with this, is that if you do buy shares, I've done this many times in the past and it's worked well for me. Don't discount using puts for what they were actually intended for, which is a hedge. Like, it's probably pretty expensive to buy this. Doesn't make a whole lot of sense for, 19 days of insurance, right? You're going to lose $350 there on it, but you don't need that much insurance. You could literally go up to here and just protect yourself for 5 days. This is something I do often. If I buy stock, I'll say, okay, what is it going to cost me to protect myself for just a short period of time? Just the amount of time that I need to know if the stock is going to go or not. And if you've got big size on, like I'm talking about, I've traded this stock literally with like 25,000 shares on in the past. And that's a decent amount. So you may want to protect yourself. And if you look at the price of this protection here, compared to, how much you think it's going to go. Like we know we have a target of at least $10. It's probably not a bad idea. Think about it. If you're just say 5,000 shares long and you think you're going to run it up to 250, well, that's like $12 profit. Would you spend $5,000 to make 60? Yeah. That's the nature of insurance, right? You don't need it until you need it, right? And of course, all those premiums that we pay for our car and for our house and everything else, they all just go in the toilet, right? But when we need it, that's the thing. So anyway, just something to think about. Hope it works out for you. I'm definitely looking at Apple long into this coming week. Also, last but not least, super important, if you've ever wanted to join me or any of the other folks at ShadowTrader Trading, now would be a great time. The holiday sale is on. Call it Black Friday, call it Cyber Monday, call it what you want. It's going on probably until the end of December. Super excited about it. Big discounts here. We haven't been offering a discount this deep, I don't think, ever. We're going 30% off this time on all advisories, and obviously you save a lot more money if you do like 3 months or 1 year, right? Because it's the same discount. So we've got monthly, so we've got 1, and we've got quarterly, and we've got yearly. And obviously if you do the yearly, that's the biggest savings because it's 30% off of that level of whatever the cost is for 1 year. And by the way, this is good for LTS, which is Live Trading Suite, and My Room, which is weekly. Either or do them both. It's up to you. We got a lot of people that are actually in both rooms. And then all of our indicators and scripts. So you got your weighted AD, cumulative tick, iceberg tick, all the good stuff that we sell there that has been really successful for us, but also more importantly successful for traders using it for years. If you've ever been kind of on the fence and saying, you know, I really want that weighted advanced decline line, now would be the time because it is 20% off. So you got to put these coupon codes in on the shopping cart page and enjoy the savings. All right, that's all. I wish you good trading and good night. Hey, this is Peter from ShadowTrader.net, and I just wanted to thank you for watching this video. If you enjoyed this content, please hit the like and subscribe buttons. And if you'd like to trade live with me every day in my weekly options advisory, then check out the link in the description below. I wish you good trading, and I'll see you in the room.